So today I am going to discuss about crude oil trading. In fact, we had been doing crude oil trading since almost 1 year now. Live trading in options after 3:30. So we started in September actually. So around 10 months we have done, and it has been a period where we have seen ups and downs in crude oil. Some learnings are there from time to time. I have been sharing my learnings from crude oil trading. So today we will review it once again, as some of the subscribers are new and their expectations are quite different, and they try to compare it with Nifty and Bank Nifty option trading, which is not right. So I have made few pointers. We'll go one by one through them. So why is crude oil option trading is not same as NSE option trading? See, in NSE we have got weekly expiry, and at the same time we have got very good volumes. There is no liquidity issue in Nifty and Bank Nifty, and even Fin Nifty also now the liquidity is good. Initially it was not very good. So one difference is that we have weekly expiry. We have theta at our side. Okay, so only we have got 5 days for the entire premium go away. Let us talk that market is stable and stand still, and we try to understand how this works. In case of crude oil, we don't have any weekly expiry, number one. No weekly expiry in crude oil or NG. And theta does not come into picture as late as last week of the expiry. How the expiries are of crude oil and NG, I have already done a video today on that, which has been posted, and we can understand from there how the expiries are, on which date they will fall. They are not fixed day or fixed date expiries, they are variable expiries, though through a logic. So this theta does not come into picture till last week of the expiry. Okay, so these two are the major differences. Now another point is that in NSE we can do n number of repairs, or adjustments depending upon how our strategy is. In crude oil, this is point 4 which I am discussing right now. Repair and adjustment cost. In MCX, we cannot be as free or as flexible in terms of adjustments or repairs, because each and every repair will cost us. In Nifty, we can have in a strategy 10 repairs. In MCX, if we want to develop similar kind of a strategy and we want to have 10 repairs means it will cost us around 1000 rupees to 1500 rupees in case of crude oil NG. Why it will cost? Because every execution will bring in the slippage cost. It will range from 100 rupees to 300 rupees, sometimes even 500 rupees, depending upon the week or day of the month, because initially this slippage cost is more, and if the market movement is swift, then this slippage could be any number, 25-30 point slippage also I have seen. So this is the major difference, that we cannot just replicate the NSE logics, NSE concepts, which may have n number of repairs, and if we try to do the same thing here, in doing those repairs, those 10 repairs, we will have our strategy stop loss hit. So we need to keep the number of repairs as minimum as possible in MCX trading, because every execution is costing us. So this is one major difference. So what is the major difference? One is weekly expiry, number two theta decay, number three the repair and the adjustment cost, which are entirely different between NSE and MCX trading. Another point is I also keep getting some query that why my LA PNL is not matching with their deployment of paper trading or live offline trading. It will never match. In case of NSE, Nifty and Bank Nifty, even your backtest results also match to some extent with the live auto result, because there is enough liquidity, enough volumes, and real results are very near to the offline results or PT results. Still there could be a difference, but they are very near. In case of MCX, we should never compare the paper trading and live offline trading with real trading. These two are entirely different poles. In case of MCX, the results could be entirely different. Like if one strategy has shown you 2000 rupees plus in PT or live offline, your actual PNL on the same strategy could be minus 2000 also. But in a long run, you can expect around 30% to 50% as the live real profit when compared to the live offline or paper trade profit. So if your profit in paper trade is 2000 rupees, expect that it will be 800 to 1000 rupees maximum in case of your real trading. So this is major difference, and we should keep in mind, because the expectation of new subscribers and new deployers is that they see the paper trading or live offline trading, and then they get lured by that okay, this is very good profit and we can go live now. And when they go live, then they realize what it is. There is a lot of disappointment at that point of time. And in fact, I have seen some of the strategy makers also, they are advertising with paper trading results, paper trading graphs. Even some people are trying to sell their strategies code also, because if you simply put a straddle with 2000 rupees stop loss, 2000 rupees target in paper trade, at the end of the month you will see it is giving you 30,000 rupees. But in practical, you may hardly get, if you are lucky and market is good, around 5,000, 6,000, 10,000 maximum. So we should never compare PT and live auto result, live offline result with real result. They will never match, and they will only bring in the disappointment and frustration. Now we have in MCX, it is not full-time trading, number one. Why we are doing this trading is just because the exchanges have now allowed the same margin to be used for MCX as well as NSE. It was it was not so before December 2020. In 2020 December, they allowed that yes, the same margin can be utilized. So after 330, the margin is free, and the free margin is not doing anything. So we are trying to gain something from that free margin, and since the expectation and the returns are likely to be very less for the reasons I have mentioned earlier, we cannot take very high risk also on that capital. Otherwise, it will spoil our evenings with family also if we try to aim too high there. So whatever we gain with not losing much is good enough for us. So even if MCX trading is able to take care of the cost of NSE trading expenses, including whatever trading platform we are using, that is more than enough expectations from the MCX trading. What are the other constraints in this MCX trading? See, point number 5, that we have very limited time of trading. See, we are trading from 4 o'clock to 11 p.m. in the evening. Okay. whatever movement comes in this particular period, or whatever theta comes in this period, that only we can gain. Market is trading from 9 a.m. to 11:30, and we are not even using, you are hardly using half of that time. Number one, we are not going positional, so we are not taking any benefit of real theta decay which happens overnight. So that is one constraint in this. So we are using the limited time, and that is more reasons that we should not have too much of expectations. We are not using time of our choice. We are using the time in which our margin is free. Okay. Let us take an example, a calculation, just a simple calculation I will give. In case of crude oil, when we start the premiums in the new expiry, they are around 250, or maybe sometimes earlier it used to be 300. So 250 I will take, 250 PE, 250 CE, total premium at the starting. So 250, 250 and 250. So total premium is 500. Let us say market is at 6,000, and assume that for the entire month market is standing at 6,000, which is practically not possible, but for understanding purpose, we are assuming that market on the new expiry, when the new expiry of option starts, is at 6,000, and market is not moving at all for the entire month, just for our understanding. So let us see how this theta plays. Now this 500 rupees premium has to become zero if market is not moving, which is not possible. Again, I am repeating that, but just to understand it, let us see. Now we have 30 days in a month. 30 days, why? 20 trading days plus 10 holidays. So overnight decay will happen out of this 500 points up to 50% of this. So 250 points decay we cannot capture at all, because overnight decay is happening and we are not participating in that. So now how much is left for us to play with? 500 minus 250 is 250 points decay. So now this is the decay which is supposed to happen in the trading hours. Trading hours means 9 to decay in trading hours. How much? 9 to 11:30. That is total trading hours. So this is 9 up to 3, 12, 3 plus 11, 14 hours. And out of this we are only participating in the market for 7 hours. So how much roughly we will, because major of the decay may happen in the evening. So let me take it around 150 points. 150 points is the maximum we can gain during post NSE trading in MCX. In ideal condition, if the market is not moving, so 150 point is the best which we will get if we are only playing theta. I am not saying about other logic or other strategy. So out of 150 points we will get if market is favorable, market is not moving, and daily we are getting around 150 by 20, around 8 points or 7.5 points daily profit. That is when the market is standstill. But it is not likely so. We have every Wednesday weekly inventory data. We have a lot of economic data is coming from US around 6-7 p.m. daily. There is a movement. There is news-based movement from Gulf, from Russia and all. So all these brings in the movement. And sometimes the movement is very severe, 200, 300 points one side. So that takes away the entire theta concept from evening trading of crude oil. So we are actually not sure of this 150 point also because of severe movements on the news based or data based or whatever it is. So whenever a down movement of say 200 points, we are not going to make profit on that day. We are going to make definitely loss. If it is slight up in a severe way, we are not going to make profit. Of course, 100 points to 150 points we can handle. So out of this 150 points, depending upon how the market will be in the evening sessions during these days, these trading days, we can expect to gain 70-80 points with reasonably good logic strategies. So 70-80 point is the maximum we should target in a month. So which makes this as 7k to 8k. If we gain 7 to 8k per month on a given strategy, which is around 1.2%, it should be considered as a very good return. Beyond that expectation, okay, we can somebody can make some strategy which is directional, or usme, if it is not very good strategy or in MCX, things don't work as we feel, as we see that directional indicator based and all, because movement are erratic. Sometimes if it's directional, we may gain 10,000 rupees also in a day. But the win ratio of such strategies is 30-40%. Okay, on rest of the day, 60% of the days we will be losing in that if it is not very good or we are not very lucky. So 7 to 8k is the maximum which we can think of any strategy in MCX. Same is the case with NG also. NG also same calculations can be done. Starting premium is around 30 rupees in the new expiry, and we hardly are left with 6-7 points in NG also, which we can gain in a month. So this is how the calculation works in MCX trading. So we are not participating in full market. We have so many other constraints as well. It does not mean that we should be totally disappointed. No, we gain something, but we should not be greedy. That is the whole purpose of explaining all this, that we should not be greedy and we should not expect it to be like in NSE trading. I have covered this expectation and risk. Now the 2 points are left. The execution risk. See, it depends upon broker. That is why the next point is importance of broker. There are different constraints in execution as well. There are some brokers who are not very advanced in investing the money in IT or in their IPI, so they don't bother about how the client will get into risk. Some brokers like Kotak, like ICICI Direct, with them we cannot consider doing MCX trading because there are a lot of errors, like one leg gets executed, second leg does not get executed, and that is the worst thing to happen. In that case, a lot of risk builds in, and we may lose in the executed leg, and other legs is not getting executed because of errors. And the errors are such that it cannot be cleared by you, because this error is not because of a technical issue of either your strategy or TradeTron or any other trading platform. They are the risk. Like I'll give you an example. In case of few brokers I mentioned, like if you send a order for selling 5,900 CE and PE, one leg will get executed. Say suppose CE. Now for second leg the error will come that for that broker they have separate criteria of defining a particular leg, whether it's liquid or not liquid. I spoke to few of the brokers, top management, and they have their own formula that or all algorithm to define that the particular leg is liquid or illiquid. So how many loads it has traded since morning, how many contracts it has traded since morning, what has been a movement, such kind of criteria they have. And when you send the order, your one leg gets executed, your other leg does not get executed. So in that case, what happens? You can keep trying to remove the error and to bring in the other leg. It will not happen because your broker's criteria is that that particular leg is illiquid and it will not be executed. So in such case, if market moves against your executed leg, then you will be in a heavy loss very soon, and this is a huge execution risk. Okay, and that is why the importance of broker becomes very critical. Some of the advanced brokers who have invested in their API, who are not having any such restrictions of illiquid legs and all, with them it is no problem. I will go with free brokers, Finvasia, Flat Trade. It's fine, they don't have any such limitations. But if you want to real brokers, IIFL, Zerodha, all these brokers, they don't have any such issues. So we have to be very careful in terms of MCX option trading in selecting the brokers. So these are few points which we should keep in mind while doing MCX option trading, and not to keep very high expectations, otherwise we'll burn our fingers. Just to give you an example of real trading and offline or paper trading in case of MCX, my strategies are running since 8 months on paper trading or live offline as well, in addition to live auto. Just let me share example of few strategies. Like this is the oldest strategy, AW03. If you are able to see, this is running from August 22, almost a year now, 11 months to be precise. Now you will see none of the month has been negative, and some of the months have shown ridiculously high profit also, 64,000, 63,000, 46,000. And if you see on average, the profit is 32,000. 77.92% is the win ratio. These are ridiculous numbers. They look very handsome on paper, but they are not practically doable. So even if 32,000 ka 1/4 we can gain 25% of this, it means we have done very well in MCX trading. So we have to be very careful in keeping our expectations at reasonable level. We should not go by these luring sheets, attractive sheets, and then go high in the volume multipliers and then burn our finger. No, we should not do that. We should only see the practical situation, and we should keep our reasonable expectations. Now, Algo has been running MCX strategies. You can see here. Let me just So these are 6 strategies in MCX and 5 strategies in natural gas, 5 strategies, and MCX crude is 6 strategies. One of each is directional, rest all of them are non-directional. Margin requirement is 550k for crude oil and 2 lakhs for natural gas. In fact, it is less than 2 lakhs, it is around 1.25 lakhs because natural gas rate has come down drastically from 800 in 1 year. And the margin used to be 4 lakhs earlier. Now the margin came to 80,000 also some time back when natural gas went to 170. But now it is at 125k. But still we should keep it 2 lakhs to calculate right percentage based return or loss. this is the matrix which I suggest on our strategies. And see, many times question come, what is the difference between 3, 4, 5, 10 when all are non-directional? Yes, there is a difference. They are entirely different strategies. We cannot have a simple same logic and then deploy so many strategies. It has to be different. Some of them trades in strangle, some is time based entry, some is indicator based entry. Adjustments are different. Okay, so all those things are different. Same case is with NG also. So this is the matrix which I suggest to deploy on our strategies. The loss could be maximum 2,500 rupees in a very bad day when slippage also plays their role. Actual stop loss in the strategies is around 2,000 in all of them except crude oil directional and NG directional, where we have kept 3,000 rupees stop loss. So we should keep these kind of risks into our mind, and if crude has moved on a particular day and the strategy has gone in negative, we should accept that losses and sit quiet, spend our time with family. We should not be fighting with the market. I have seen few guys who, if the strategy triggered, they go into manual immediately to start fight with the market and to make an effort to recover whatever they have lost, and the end result we all know what happens in such conditions. So that these are the points which I wanted to make clear. If there is still any query, I am available at my Telegram channel. I can be directly messaged also. We can speak on phone. That's all from me in this video. If you like the content, please like the video. Ask your colleagues, friends, your circle whom you feel can be benefited to subscribe the channel, and press the bell icon as well, because I will be posting the videos regularly now, so that they get the notification for the next upcoming video. Thanks a lot.